In that context, let me turn to the Western European situation and the so-called sovereign debt crisis. On this picture, you can see three different things for many of the Euro members, as well as some other selected developed countries around the world. And let me very briefly explain what they are. The first column is the cyclically adjusted budget deficits. The middle column is the debt to GDP ratios, and in the context of what I just showed you a second ago, the third column is the growth environment score. And let me say a few very important but quick points. In the context of the growth environment score, if you cast your eyes specifically to each country, and remember what I just showed you a few minutes ago, most of the troubled Euro countries are not only ones that suffer from having high debt and high deficits, they also have very low GES scores. And in my judgment, the ultimate and longer dilemma facing European Monetary Union is that it should not really have had all these countries in there with such divergent productivity indicators. And ultimately for Greece, Portugal, and possibly Spain and Italy to permanently survive, they have got to do things to get those growth environment scores higher. And as I've just shown you, much of this region is starting or currently has a position of these growth environment scores being considerably better than these troubled Club Med members. So in that context, if I were involved in focusing on this region, that would be the sort of thing that I would be focusing on to try and attract investor attention from the rest of the world. Two other quick points to mention about the greater context of this picture. It is worth saying, in my judgment, that despite how challenging the individual deficit and debt position of the Club Med countries are, actually on average, importantly and rather oddly, the weighted average position of the Eurozone's debt and deficit position is not as bad as that of the US, the UK, and of course Japan. And that tells me in this context that it's not really a sovereign debt crisis, it's a crisis about the structure, the leadership and governance of EMU, and the fact that there are countries in there with very differential productivity rates. But to stop the debt part of it, in my opinion, linked to what I've just said, it would be relatively easy for European policymakers to do if they were prepared to behave as genuine European policymakers and not ones just from a national perspective. So against that background of the specifics of the European thing, let me just go backwards now, and again apologies to the translators, to leave you with two other pictures before I hand over to the next session. I showed you earlier the contribution to the change in world GDP over the past decade. Here is the same thing looking forward at the decade we have started. And in this particular slide, I am showing you what we are assuming in real terms, so adjusted for inflation. And especially having just focused on the relatively robust growth environment scores, these measures of productivity, perhaps now you would not be so surprised that if one looks at the CEE region collectively, in the decade we've started, it should be regarded as a genuine brick. I get advice from all sorts of people all over the world every day, given that I am Mr. Brick, the person that created it, as to what countries and what regions should be brought into the acronym, whether it be BRIC-A for for Africa or BRINC for Nigeria and so on. But if you actually look at the CEE as a region for this decade, as you can see on the numbers we're looking at, it will contribute in real terms quite a lot more to the world economy than any of the other BRICS except China. And in that context, it is a very important and frankly, frequently under-considered region of the world. And on the back of that, I'll leave you with this final picture, because if countries deliver on this potential that I've talked about from the region, by the end of the decade, I suspect it will be on a lot more people's radar. Because linked to what I've just showed you, this shows you the share of global GDP by 2020, only 8.5 years off from today. And what you see here collectively, the CEE will have risen to have been actually bigger than Japan. So I wouldn't want to opine on anything more than the region about that than I have, certainly not on any of the individual issues, but it looks to me from my 40,000 feet perspective of somebody that's constantly moving around the world and looking at how this very exciting world is changing its interplay, and especially against the background of the troubled Club Med countries in this European crisis, this region has a lot that should be exciting people. Thank you very much.
Thank you. Many thanks for this interesting, inspiring lecture.